There is a massive contradiction happening on Solana right now, and almost nobody is talking about it. On one hand, we just saw the single largest daily inflow of stablecoins in months, over $800 million hitting the chain in 24 hours. That is usually a signal that whales are positioning for a violent move to the upside. But if you look under the hood, something is breaking. The validator count is collapsing, dropping from 5,000 down to just 800. The network is getting centralized at the exact moment the price is testing a do-or-die support level at $142. If this level breaks, the structure since 2023 is invalid. If it holds, we are likely looking at the start of the final run to $600. Today, I'm going to show you exactly how I'm playing this setup, where my stop loss is, and why this specific weekly candle decides the fate of your portfolio. Welcome back to Crypto Yield Pro. Let's cut through the noise. Right now, Solana is trading around $140 to $150. To the untrained eye, this looks like a standard correction. We are down significantly from the highs of September, and sentiment on social media is mixed. You have the moon boys screaming regarding a bounce, and you have the bears calling for double digits. But context is everything. We are sitting on the edge of a razor. The price action over the last 3 months has been bleeding slowly into a critical technical shelf. This isn't just support. This is the structural floor of the entire bull market trend. What makes this analysis different is that we have data today that contradicts the price. Usually, when price bleeds, liquidity leaves. But this time, liquidity is flooding in. So, is this a trap, or is this the highest probability buy zone of the year? To answer that, we have to look at who is actually buying, and more importantly, what they are buying. Let's start with the hard data. Take a look at the stablecoin supply changes. Solana is leading the entire market. In the last 24 hours alone, we have seen positive inflows of over $800 million. That is nearly double what Ethereum received. Money does not move on-chain to sit idle. Stablecoins are the dry powder of the crypto market. When $800 million enters the ecosystem, it is there to execute orders. This suggests that institutions or very large whales are front-running a move, positioning themselves before the retail crowd wakes up. And they are not just parking capital. They are using it. Look at the DEX volume. Solana is processing $4.4 billion in daily volume. Ethereum is doing $2 billion. Solana is currently flipping Ethereum by a factor of 2 in terms of economic activity. That is a fundamental metric that justifies a higher valuation. But here's the catch. Where is that volume coming from? If we look at the revenue breakdown, a massive chunk is coming from pump fun and meme coins. Over 63% of all DEX volume on Solana is meme coin related. This is a double-edged sword. On one side, it burns soul and drives revenue. Pump Fun alone generated $11.5 million in fees last week. That is incredible cash flow. But on the other side, it means the network is currently addicted to speculative mania. If the meme narrative dies, 60% of the volume evaporates. And this brings me to the biggest red flag in the data. Look at the validator count. It has plummeted from 5,000 nodes down to roughly 800. The cost of hardware and the complexity of running a node is pushing out the little guys. The network is becoming physically more centralized even as the price tries to recover. However, there is a silver lining that the bears are ignoring. The real-world assets sector, tokenized treasuries and credit, just crossed $1 billion in TVL. This is the adult money. It balances out the casino money from the memes. So fundamentally, we have a network that is high risk, high reward, but flushing with unprecedented liquidity. Now let's see if the chart agrees. I'm analyzing Solana on the weekly time frame. This is where the signal is. Everything else is just noise. We're looking at a classic ascending channel that has been respecting price since late 2023. The orange dotted lines on my chart mark the boundaries. Right now, price is testing the lower trend line of this channel. This is the moment of truth. We are currently sitting around the 236 Fibonacci retracement level. It's acting as resistance, but if the price continues to rise, it'll act as a major support. My Fibonacci levels are anchored between the low of $95 to the high of $295. Notice how we wicked below the channel, but the bulls have been winning the fight for the last 3 weeks. This is what we call a trendline defense. The bulls are trying to defend the market structure. Now, look at the moving averages. We are trading above the 200 simple moving average. That's the green line. As long as we are above it, the macro trend is bullish. However, we are fighting with the 10 exponential moving average, the blue line, and we are currently below the 21, 55, and 100. This compression means volatility is imminent. The moving averages are squeezing the price against that $142 support and resistance. Usually, when ribbons compress like this, it leads to an explosive expansion. Down at the bottom, take a look at the Fibonacci RSI. It was in extreme oversold territory, but after 3 weeks, it is attempting to cross into the neutral zone. The last time this indicator was this low while price was at channel support was back in the accumulation phase of 2025. We later saw a 160% pump. Also, pay attention to the volume profile on the left. The point of control, the price level with the most historical volume, is sitting right around $145. This acts as a magnet. The price loves to return here because this is where fair value has been established. Technically, we have a confluence of support: the channel bottom, the 236 fib, the 200 moving average, and the point of control. So, how am I trading this? I don't guess. I execute based on levels. My accumulation zone, the green box on the chart, is between $120 and $160. We are dead center in that zone right now. For my long-term portfolio, I'm comfortable adding exposure here because the risk-to-reward ratio is skewed heavily in my favor, but we must protect our capital. My stop loss for short-term swing trades is a weekly close below the 200 moving average. If we lose the green line and close below, the setup is invalid. At that point, the channel is broken, and we could see a flush down to $80. I'll cut the short-term position there and wait. If this support holds, which the stablecoin inflows suggest it will, my targets are precise. Target 1 is $220. This is the 618 Fibonacci level and a psychological resistance. I'll trim 30% of the position there. Target 2 is the previous all-time high region at $295. Target 3 is $420. And my final target for this cycle, if the extension plays out, is $620. I'm using a trailing stop strategy. Once we hit $220, I move my stop loss to my entry price. If we hit $295, I move my stop loss to target 1. This guarantees that a winning trade never turns into a loser. Here is the game plan. The data is telling us that the market is fearful, but the money is greedy. Retail is scared because the price is down, but whales are moving $800 million in because they see the liquidity floor. The memecoin supercycle narrative is risky, yes. The validator centralization is a concern for the long-term ethos of crypto, absolutely. But for the next 3 to 6 months, liquidity drives price. And right now, Solana is the liquidity black hole of the entire industry. If we close this week above $142, the probability of a bounce to $200 increases significantly. If we fail, we hedge and wait for lower prices. It's that simple. To summarize, Solana is a casino built on top of a bank vault. The meme mania provides the volume, but the RWA growth and stablecoin inflows provide the floor. I'm betting on the vault holding firm. I want to know your take. Are you buying this dip, or does the validator collapse scare you off? Let me know in the comments below. If you want to see my portfolio updates in real time, specifically when I trigger that stop loss or take profit, join my free Telegram group linked in the pinned comment. I post my charts there every single day. Now, check out my Bitcoin video on your screen to see exactly where to hold. Thanks for watching, never financial advice, and I'll see you in the next one.